Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today, and my name is Trent. With me here today is my colleague William, a product specialist from Phillip Futures. So, how are you today, William?
I'm good, thank you. How are you?
Good, same. So, in this podcast, we will talk about the trading themes for this week and also share how traders can position themselves for the week. So I would like the help of all our beloved audience today to share this video to all your friends. So the more people that are watching this video, the more we are motivated to deliver greater content to all of you. So without further ado, let's jump into our topic for today. So we will be discussing on the topic, how should investors react to equities and crude oil slide due to UK full lockdown and coronavirus mutation. So to our audience out there, if you have any questions, you can message in the comment box below. Okay, last week, most of the major equity indices and commodities, such as crude oil, had plummeted due to UK triggering Tier 4 lockdown and EU closing their borders to UK. So William, from your point of view, how is the recent mutation of coronavirus compared to the previous mutation? And what are the implications of the coronavirus mutations to each market, particularly on equities and commodities?
Okay, so if you read the news in the internet, this mutation was actually first detected in September 2020 in the UK. But in November, more than one of a quarter of the new cases detected were from this new mutation virus. And this new virus has reached about like 2/3 of the new cases in December, in the mid of December, which is why the UK government decided a full lockdown, which is the strictest lockdown ever in London. Okay, so moment these the lockdown and the virus mutation, the news make it globally for all of us to know about the news. We see a really panic sales on crude oil and also on global indexes and also on the equities. So now, my personal view on this particular incident, I will break it into two parts for us to understand it. The first part, if you realize, actually the US daily new cases and death toll are actually much higher and severe than the UK. But why is US indexes still in the bullish momentum or in bull mode? And UK or the crude oil suddenly just tumbled. This is because US government, they refuse to lock down the country, but UK government, they decide to lock down the country to fight the pandemic. And this particular lockdown has actually caused the UK economy to stop rolling, and this will affect the economy in the European Union as well. So in my opinion, this is not about the virus mutation at all. Virus mutation comes second. The main causes is due to the economic lockdown and will cause a chain effect that lead to the panic selling, because when one economy is down, then the entire economy in that region will be affected, and this is what really caused the panic selling. Now, this is my opinion on the first part. Now let's just look at the second part. So if we ask ourselves as an investors or as a traders how we look at this, so second part, we should ask ourselves, can UK afford a full lockdown in the country for so long, months and months? Is that possible? Even we as a Malaysian, we just take our own country as an example. Do you think Malaysia can afford to lock down our entire Malaysia just for one more month? Do you think the SME can survive for another month of lockdown? If your answer is no, then I guess UK lockdown incident, the answer will be a no as well, because what we face will be exactly the same problems what they will face. So if you think UK lockdown will be lifted as soon as they see slight recovery, because they can't afford a long-term lockdown as well, because the damage is going to be really huge on the economy. So if you think that the lockdown will just be very temporary, so I think this could be an opportunity for traders or for investors to pick up some recovery stocks due to the sudden panic sell. Okay, so to conclude everything, I think the sell-off is just temporary, and there is no countries on earth can withstand or can hold a long-term lockdown period. Right? So this is my personal opinion.
Yes, William, I totally agree with you. Long-term lockdown will definitely hurt the economy of the country in the long run. Okay, so for our next question, will the coronavirus mutation have a big impact on the current uptrend? And how should investors react to the current market conditions?
Okay, so up to that, if you look at crude oil and major indexes, okay, like US indexes, even our KLCI indexes, I think the support and the main structure, the uptrend structure, still hold to it and has not broken yet. Okay, so uptrend structure remain healthy and intact. So my personal opinion from the questions just now that you asked me, I reckon investors should take this as an opportunity to bargain hunt in the equities market, especially crude oil related companies, to ride the recovery trend as we discussed it in our previous episode, how investors can capitalize themselves in the crude oil recovery. Okay, so at the same time, I think investors can closely monitor the low of the crude oil and US indexes that happened on the 21st of December 2020. So the lowest price point of crude oil and all major indexes on 21st December, that is gonna be a very critical support. Okay, so a close below that support and fail to go back up immediately might trigger another round of sell-off lah. So just need to monitor the lowest price point that happened on 21st December really closely. That is all we need to do lah.
Okay, then we shall see how the prices will react when they return to their respective support levels. Okay, so the next question. I reckon many of our audience will be interested to know this question. Most of the share prices of the major vaccine companies such as Pfizer, BioNTech, and Moderna had tumbled recently. Do you think currently is a good time to enter into those counters?
Okay, so up to that, if you look at the price action of the vaccine-related companies, there isn't a solid sign that the share price is going to stop dropping soon. Okay, so investors are really advised to at least see some buying momentum or a support before we jump into to catch it, to prevent of catching a falling knife. So I personally think that the market in general right now is worried that the vaccine that these companies that you mentioned just now, the vaccine that they produce might not work on the mutated virus. Okay, so we need what in market general they do not like uncertainties. So this whether the vaccine that they produce is works on the new mutated virus, this is an uncertainty, which is why the share price of these vaccine related companies drop. But for us to really know whether the vaccine that they produce or they can counter to enhance the vaccine to counter this new virus mutation, I think we need to further wait for the news by the WHO or the FDA to verify the news. Okay, but if you look at the share price, especially on Pfizer, in fact it has dropped back to the November price point, to the November price level, which I think is quite reasonable right now. So as long as we see a support in the share price, I reckon it can be a good buy. Okay, so shares like Pfizer or Moderna, it can be a good buy.
Yes, Pfizer seems to be in a quite attractive price to enter at the moment. Okay, to our audience who are interested to trade the stocks of the vaccine companies, you can actually open a CFD trading account with Phillip Futures and start investing in these companies. So for more details, you can drop us a message on Facebook and our representative will get back to you. Okay, lastly, before we end the podcast for today, William, what else should investors be aware for the coming weeks?
Okay, so for the upcoming weeks, like I mentioned earlier, I think investors should really keep an eye on the lowest price point on crude oil and on all the major indexes that happens on 21st of December, because I personally call it a virus mutation candlestick. If you look at that candlestick, I call it a virus mutation candlestick or the UK lockdown candlestick. So as long as the price is able to support above the lowest on 21st December, I reckon the market has digested the news of these negative news. Okay, so other than this, I think investors should take note on the 900 billion stimulus package that US government has just approved. So this particular stimulus package has been the second largest package in the history of the United States, and basically every citizens of the United States, they are going to get thousands of dollars from the government to spend. So this definitely is going to boost the consumers' sentiment in the United States, and lots of money is going to flow into the market. So this might cause another round of buying momentum in the equities market or even in the gold market. So yeah, I reckon investors should take note on all these to take note on all these when we are investing in the market.
Yep, correct. You're right. Investors should also monitor closely on the development of the US stimulus package, which may have big impact on the market. Okay, and now we have come to an end for today's podcast. So to our audience out there, if you have any question or any topics you want us to discuss next week, you can message in the comment box below. Okay, thank you for listening to our podcast and happy trading for the week. Okay,
Okay,
bye,
happy
William.
trading. Okay, bye bye. Thank you, Trent.
Bye.